What's up guys, welcome back to the channel. In today's lesson, I'm going to explain how to trade smart money concepts on synthetic indices. This makes it exactly 1 year I talked about how to trade smart money concepts on volatility index. And today I'm back with another lesson to teach you how you can actually make money by trading smart money concepts on synthetic indices. Now, one thing you have to understand is that if you really want to trade smart money concept on synthetic indices, it moves very fast, and if you want to trade it, you have to set clear risk targets and clear profit targets. Okay, you don't have to play with setting your stop losses and take profits if you want to trade it. One thing I like about synthetic indices is that it's not affected by any fundamental events. News events like NFP and CPI does not affect synthetic indices. And another thing is that it's open 24/7. okay, it runs from Sunday to Sunday and you can actually trade it anytime you want. Okay, so this lesson is going to take a lot of time. I'm going to take my time because I can remember the first time I talked about this concept was 1 year ago. So when I might talk about it again might be in the next 1 year. So I'm going to take my time to explain it. Okay, the particular lesson there I didn't take time to explain things you need to know about synthetic indices, and today I'm going to take time to explain synthetic indices itself, then show you how to trade smart money concepts on it. I'm going to give you rules you're going to follow to make the most out of synthetic indices. Okay, so one thing you need to understand is that each of the instruments right here has its lot size. Any instrument you want to look at, you're going to type it. So let's look at maybe volatility index. So let's look at that. So these are some of the volatility instruments which you can actually trade, and one thing you have to notice is that it has different lots. Okay, you can actually still check for jump. We have jump right here. Let's look for jump, and you see we have jump index 10, index 25, index 50, 75, and we have 100. We have step index, and this is it right here, and we equally have boom and crash. So let's look at boom right now, and you see we have boom right here. And for what you can see, we have boom 300, boom 500, and boom 1000. We equally have crash. And for what you can see, we equally have crash 300, 500, and 1000. So let's start with the first, where I have the first example I'm going to explain, I think, is on step index. So step index right here. Now, one thing I really want to talk about is, I said they'll have different lot size. So I think I have it. I also referred to one of my old notes to get the lot size. So each them has their lowest lot size. So this is indices and their lowest lot size, right? So for step index, this is the lowest lot size right here. For volatility 10, this is the lowest lot size. For volatility 10 1s, this is the lowest lot size. For volatility 25 itself, this is the lowest lot size here. And for volatility 25 1s, this is the lowest lot size here. So each and every one of them, you see jump index 100, each of the lot size are the same. Then for crash 500 and crash 1000, this is their lot size right here. So each instrument right here has different lot size, and this is especially for volatility. Okay, each of the volatility has its own lowest lot size. This is their lowest lot size. Then you can actually look to increase them. Okay, now my advice is that if your account is less than $100, make sure you're using the lowest lot size, because the volatility is actually very fast. Okay, they move very fast, and if you look at volatility 100, it's one of the fastest right here, while volatility 25 is actually slower than volatility 100, right? So this is here. I hope this makes sense. I think I have to increase the size of this, so if you want to take the screenshot of the lowest lot size, you can do that right now. So I think you should take a screenshot. So let's do it. You have 2 seconds to do this. Okay, let's jump straight into what we have for today. I said I'm going to teach you today how to trade smart money concept on volatility index. Like I said, I used to trade synthetic indices, but for some time I think I stopped trading it. And when I was actually trading it, then I was using a strategy called divergence. And this week, a friend of mine who introduced me to forex trading, he came to visit, and we were actually referring back to the memories then. He was actually my classmate while I was in school, so we referred back to the old memories when we were trading and some of the things. So I referred to one of my phones back then, and I discovered this. So this was the message I sent to him. I think this was 2019. His name is Favor, right? This is his name. So cosmate, CM means cosmate. It was my cosmate. So I said, guy, divergence is the future. Okay, then I was trading strategy called divergence. That was, I think, 2019. I said I don't spot 5 different divergence. I don't trade 4 with their lowest lots. Then this was me saying I spotted 5 different divergence and I took 4 of the trades with their lowest lots, and I'm making the amounts which I covered right here. I covered the amounts I made. Then one is still playing with my emotions. Guy, binary is the best. Okay, so I was saying that synthetic indices was actually the best then, because I took 5 different trades and I won 4 of it, and one was actually playing with my emotions. Then I still text back saying, if you use 30 minutes time frame, you will be spotting it anyhow, right? That's what I said to him. That the particular divergence, if you actually trading it on the 30-minute time frame, you're gonna spot it. I also said to him, upon say they don't hit my TP, they are still moving. So what I was basically saying was that these setups has actually hit my take profit, but they were still moving in my direction with divergence then. So to tell you, this volatility indices is actually profitable if you can trade it right. And one thing you have to take away from this is, upon say you don't hit my TP, that is my take profits. Even then, I was actually paying attention to risk management. So when I started this lesson, I say you should set a clear profit target and stop loss. Okay, you have to use your profit target and your stop loss, because if you don't use a profit target and you don't have your stop loss in place, this instrument moves very fast and they can actually take you out, kick you out, and you can blow up your trading account without good risk management. So that's why I also showed you the lot size, so you're going to put risk management into consideration. Now, this was back to 2021. I think at this point, I already know how to use smart money concept. So this was what I said to him. I said, bro, forget about the money that is lost. I think we lost a lot of money then. Just look at the bigger picture. My happiness is that we have a winning strategy. This was talking about smart money concepts. Then this was back then in August 2021. So I say, bro, forget about the money that is lost. Just look at the bigger picture. My happiness is that we have a winning strategy. Even with the amounts there, we can go far if we set a daily target of this. So I said, calm down, it's going to be fine. And this, my friend, visited me this week, so I had to refer back to the memories because I have a lot of screenshots. Then I went back to the phone I was using then, so I was seeing a lot of memories, screenshots, winning trades, losing trades. So this brought me back, and when I decided to talk about synthetic indices, I had to refer back to the charts we had then, and that was actually a text message I sent to him. Then I was using divergent before I switched to smart money concept. Before I stopped trading smart money on synthetic, then I was now focusing on currency. So the last part of that message, if you're trying to give up on what you are doing, if you're trying to give up on trading, I think you shouldn't give up. Okay, keep doing that, stay consistent. I told him we should calm down, we're gonna make money, we should forget about what we lost. So this to tell you that I actually lost a lot and we've come this far. Okay, so let's do this. I'm going to give you a step-by-step guide, and if you want to trade smart money concepts, first thing first, you're going to start from understanding structure, understanding the order flow of the market. And remember, when I started this lesson, I said this lesson might take a longer time because I'm going to spend time explaining things, so you're going to understand it well. Okay, so let's jump straight into it. Firstly, these are the rules. Firstly, you will have to understand and identify the order flow. Okay, you have to identify the order flow of the market. Understand if you're in a bullish order flow or we are in a bearish order flow. So this is the first thing you have to identify if you're looking to trade smart money concepts on volatility index. Because one thing about volatility index is that when it's ready to trend up, it's going to trend up, and when it's ready to drop down, it's going to drop down. Okay, like I said, it's not affected by any news events, it's not affected by fundamental events. So you also have it in mind that you have nothing to worry about, unlike when you trade in the currency pairs. And once you understand the order flow, the second thing you have to identify is your POIs. Okay, your POIs, that is the point of interest you're going to look at. Okay, once you've understand, okay, I'm actually in an uptrend, I'm actually in a downtrend, the next thing you're going to look for is where you're going to trade from. Am I going to trade from an order block? Am I going to trade from a supply and demand level? Am I going to trade from a fair value gap? Okay, so this is the next thing you have to identify. Now, once you've identified your POIs, the next thing is going to identify is what we call price inefficiency, which can also be called imbalance. Price inefficiency can be called imbalance or fair value gap. So when you're looking at maybe a supply and demand level, so you're going to identify price inefficiency. Did price leave inefficiency when it was moving out of a range, when it was creating that order block or the supply and demand level? Did price leave an inefficiency? That candle that moved out, is that an institutional candle? Because you use price inefficiency to identify institutional candles, right? Then when you must have identified your price inefficiency, now this is where return to zone consideration is going to be very important, because you're going to be identifying your liquidity areas. Okay, so you're going to look to identify your liquidity areas. Okay, that's where you're going to identify liquidity. So first thing first, identify the order flow. look for your point of interest. Make sure that the institutional candle has an inefficiency. Fourthly, make sure that it's building liquidity, because liquidity improves the probability of the trades playing out. And lastly, your entry. Okay, and this is where we have different entry types which you're going to consider, right? And all these concepts I've actually explained each and every one of these on this channel. So if there is any concept you don't really understand here, you can then refer back to our channel. So these are the rules to follow for this trading strategy. Now firstly, let's say maybe we have price trending this way. So when you see this kind of price action, this simply explains that we are in an uptrend, right? This has given you the understanding that price is in an uptrend. So when the order flow is bullish, what are you going to look for? You're going to look for your longs. You're going to look to get involved and trade the longs, right? And when you're looking to trade the longs, you see this pullback right here. There are people who look and focus on trading the pullbacks, but to be on the safer side of the market, I will advise you should look to trade the longs. Okay, look to trade the longs right here. That is the moves to the upside, because in this case we've seen that the order flow is actually bullish. Price is pushing to the upside. And when you must have identified this, when you must have identified that price is bullish, the next thing is your POI. And where are you going to trade from? I said you can look to trade from either your supply and demand levels or your fair value gaps. Now, assuming you're looking to trade your supply and demand levels, this is a very good level which you're going to look to trade from. And if you're looking to trade from a fair value gap, it's actually possible that we might have a fair value gap. In this case, a fair value gap might be resting somewhere around this area. But for the purpose of this lesson and the way I trade, I usually trade from my order blocks, right? Order blocks and supply and demand levels. So this is the area I'm going to look at. You're going to look at this institutional candle if there are inefficiencies in here. And once there are inefficiencies, what you're going to consider is liquidity area. That is when how price return back to your zones are actually important. Okay, you're going to look at how price is returning back to this level. So if price was able to build liquidity and inducement areas just like this, then this is actually a high probability trading opportunity, and you can look to get involved, and you can actually look to get your entry right here, approaching with any entry type of your choice. Then you can look to trade to the upside, because price is actually in an uptrend. Okay, price is actually in an uptrend, and this one is actually a continuation pattern. Okay, this particular setup is just for a continuation pattern, and we usually have a reversal pattern. In this case, we equally have a reversal pattern, because from what you can see, if you're looking to trade a reversal pattern, what is it going to look like? So from here, you're going to see that we have a break of structure to the upside. And if you know what a break of structure means, a break of structure simply means that price is in continuation of the trend. Just like we have a bullish order flow, that is, the structure is bullish. That means that price is actually moving to the upside. And you see, after price mitigates these higher time frame points of interest, price mitigates this area, and we have a push to the upside. So this is a valid break of structure, and right here this is a pullback, is actually a valid pullback, and you can actually mark it. So when you have this pullback and this break of structure, this explains that we are actually in continuation of the uptrend. But when we start seeing what we call a market structure shift, because from what you can see from here, price could actually react from this area to break a structure to the downside. Now this is a market structure shift right here. So when you see a market structure shift simply signifies a possible trend reversal, right? It means that we actually going to see a possible shift in market structure. This is our higher low. It was protected. Price didn't get to the higher low. This is another higher low right here. When price came, it only mitigated without breaking below a higher low. We have a push to the upside, a break of structure to the upside, which explains a continuation to the upside. This high was formed. We had a pullback which formed this higher low. Price pushed to the upside, a break of structure of this high. Then this is a shift in market structure right here, because price breaks below this a higher low. So this signifies a possible shift in market structure. Now when you've seen that the order flow is actually shifting, because from this point we've seen a shift in order flow, price is trying to shift trend at this particular area. Now what you're going to do is you're going to look at another POI, because at this point you're going to have another POI right here. So when you've identified your point of interest, still make sure that your point of interest has inefficiencies. Very, very important. So once price leave inefficiencies, still consider how price is returning back to your zones. Okay, now how price return back to your zones is actually very important. Nice. So at this point you see price building inducement areas right here and liquidity area. So after that, you see price is going to tap into your zone, and this is where entry is very important. You're going to look for a very nice entry type right here, and when you get your entry, you're going to look to trade to the opposite direction, because for what you can actually see, price has now shifted from a bullish trend to a bearish trend right here. So what you have to understand in the market is that price does not move in a single direction. Price will always move from a bullish to a bearish trend. That is a bullish order flow to a bearish order flow. Just have that in mind, and Anyone that had interest in trading from this area, let's say when price broke structure to the upside right here and they had interest in trading from this particular low, you're going to see it's going to be a failed setup. So when it failed, what you have to do is just to take advantage and trade the change in market trend. Okay, look for your entry from this particular area. If you're trading from a fair value gap, you can actually look to get your entry from that area and trade to the opposite direction. Now what you have to understand is that smart money has different concepts. Okay, there are a lot of concepts in smart money which you can look to build trading ideas and trading opportunities, but this is actually what I want to show you in today's lesson. This is the particular one I picked interest in and I want to show you in today's lesson. So firstly, identify your order flow. Secondly, look for your POIs. Thirdly, look for your price inefficiency. Fourthly, make sure there is a build of liquidity and try to get your end. So let's look at price chart example right now. So this is step index 2 hours time frame, and from what you can clearly see, if you look from this area, you can see that price was trending to the upside. So this is actually very clear if you're looking at it from this particular area. What can you see? This is a bullish order flow. Price is pushing to the upside, a pullback. You see price was actually trending up to this particular point we have right here. So you can see this was a clear bullish order flow. So if you are looking at this particular area, we are going to look to get your longs. We are going to look to the buying at this particular area. But the downside of this particular area is that the point of interest price left, price didn't actually came back for mitigation. That's just the downside, because if you look closely, you're going to see we have a very nice zone right here, but price failed to get to this particular zone. And we had a very good point of interest right here actually, but we still get to this right now. But where I want you to pay attention to is this particular area, because we have a reversal setup right here. So what you have to notice is that from this particular area, you see price move to the upside. After it moved to the upside, what do we see? We have this pullback. So after the pullback was printed, this was your higher low, and after price printed this higher low, what we see is that price moved to the upside. We have another break of structure right here. So I think we should mark the break of structure so it will be very clearer, so we can actually see. So this is another break of structure right here, a very clean one. And at this point, you see price breaks structure to the upside, and I think I have to zoom in right now so we can see what price clearly do. So when price broke structure to the upside, where is our higher low? This is our higher low, and our higher low is actually protected. But what we see is that we have a reversal pattern right here. What we see price do is that price moved from that particular area and it's pushed to the downside. You can see that after the break of structure, price reversed to the downside, and this is another break of structure right here. So if you have interest in trading from this area, what is it? You've understand that we are actually in a bullish order flow, and at this point we are having a bearish order flow, price pushing to the downside. Now what are you going to look for? You're going to look for your POI. That is the point of interest you're actually going to look to trade from, and this is a very good point of interest. If you look to mark this particular area, you see this is a very good point of interest right here. So after you marked your point of interest, what else do you have to look for? You have to look at the institutional candle if it has inefficiency. Now looking at this particular area, you see you have this inefficiency right here, and you see the institutional candle. You see these candles, these are multiple bearish candles that pushed price to the downside, right? And in this case, you have to understand that the green candles are my bearish candle in this case. Okay, I think maybe it was actually a mistake, but in this case the green candles are the bullish candle. But I think I have to make correction to the settings so it doesn't get confused, right? I have to make correction to the settings so you don't get confused right here. So now the correction that has been made, I hope this makes sense to you now. So let me zoom out so you can clearly see. So from what you can see right now is that our bullish candle is the green candle, right? The green candle is our bullish candle, and the bearish candle right here is the black candles, right? I hope you understand candlestick pattern. Sorry, I made a little mistake on my settings, but that's not actually a mistake if you understand candlestick patterns and their colors and price movements. But I'm just making the corrections for those who doesn't truly understand candlestick patterns and their colors. And why I'm using green and black right here is because I'm talking about synthetic indices. But when I look at currency pairs, I use my normal blue and black, and that's my signature candlestick, right? And if you want me to make changes to that particular candlestick I use for currency, you can actually comment down below to tell me why I should make changes to that. But I think that is actually my favorite. So now looking at the price action, sorry for the distraction, looking at the price action we have right here. So you see the multiple bearish candles that we are pushing to the downside. This is our institutional candle, and just like I said, it's left price inefficiency. You see it's left this inefficiency right here, which tells you okay, there is need to trade from this order block right here, because from what you can clearly see, this is a very good order block, and the original order block in this case is actually this bullish candle that swept liquidity at this high. but at this point I had to refine to this candle, and you can actually go ahead and refine further to the lower time frame, but I don't have interest in doing that. So you see, we had a shift in market structure which tells us that we are pushing to the downside at this particular area right now. Now, what else do I say you should look for? There should be a build of liquidity or an inducement area. Now, for what you can clearly see, price left an inducement area in this case. And why is this an inducement area? This is an inducement area in the sense that we have a break of structure right here, and a lot of smart money traders will now be looking to trade from this particular area because we have this nice zone right here. Now, what you're going to see is that price is going to sweep this because a lot of stop losses is going to be placed at this particular high. So inducement area is more like a trap for smart money traders. If you're a smart money trader, inducement area is a trap where it's going to take you out if you look to trade from there. Now, you see, all the things we're looking for is actually right here. We identify the order flow where we have a shift in structure, identify the POI, which is another block, and we equally identified this price inefficiency. We have this inducement liquidity area that was built, and what you can clearly see is that price returns back to mitigate our zone. Okay, you can see price comes back, taps into our zone at first, a little reaction, and it comes back to tap deeper into this area. So you would have looked for any entry type of your choice to get involved in this setup. So if you're looking at this is where you're going to get your entry. If you're using the aggressive entry method, your stop loss above the zone, and you can actually go for your profit targets. And most of the time we advise to target this external range liquidity. Now, if you got your entry from there and you targeted this external range liquidity, you're going to see this setup offered about 1:6 risk to reward trade, right? And you see price actually continued to the downside. So if you looked to hold in continuation to the downside, you see this was actually a very nice setup that presented about 1:6 trading opportunity. And now you see we're having show reversal to the upside. So this is actually a reversal pattern, and this is actually one of my favorite smart money concepts pattern, which I usually trade when I look for a liquidity sweep pattern and a reversal. So it's actually a nice one. So let's look for another example, I think, on VIX 25. So this is VIX 25 itself, the 2 hours time frame. Now we have a very good price action right here, so we're going to look at that particular one and we're going to pay attention to it. Just like I said, firstly identify the order flow of the market, and in this case, you see we had a bullish order flow. You see from this low, you see how price was reacting massively to the upside. And at first, just like I explained, price will always shift in its order flow. And just like we see right here, I'm going to explain this very fast. From this particular area, what can you actually see? We had a bullish order flow right here. And when we had this bullish order flow, what you can see is that we had a push to the upside. We have a pullback, just like I said. You see price comes back, rebalances the inefficiency, continues to the upside, and it was not able to get to this order block right here, and we had a continuation to the upside, a pullback, a continuation. We see series of mitigation right here, a continuation to the upside. We have another break of structure right here, price comes back for another mitigation right here, and you see a continuation to the upside, another break of structure, it comes back for another mitigation. This is why I say smart money concept actually works on synthetic indices. Okay, you see we had a lot of trading opportunities right here, and if you're looking right here, you would have made a lot of money. And for what you can clearly see over here, you see the order flow right here was actually bullish. Okay, we had a bullish order flow right here, we had series of mitigation. You see price comes back, another mitigation right here, you see another break of structure to the upside, you see this break of structure, price comes back, rebalances this inefficiency. You see this was the higher low, moves to the upside. At this point we have this break of structure right here, and from here you see price gives us a shift in market structure. You see we have a very nice shift in market structure right here. You see when we had a shift in market structure, price left inefficiencies right here. You see now we're getting a reversal pattern, just like the very first example I showed you right there when we had the order flow was bullish. You see we had a bullish order flow, and what makes up this bullish order flow? This series of mitigations we have right here, series of mitigations we have right here, right? You see these mitigations, we had it right there, and now we have a shift in market structure. This is where we're getting a very clear shift in market structure. So now we have this shift in market structure, just like I showed you in the last example. What you're going to do is you're going to look to trade from a zone right here, right? So you're going to look to trade from a zone. You see we have a very good range created demand zone right here. You see price actually spiked above the zone, but if you included few pips, giving few allowance for this zone right here, you see you got an entry, and you see we had a reversal. Now the order flow shifted to a bearish order flow where price starts to push to the downside, and you see the order flow was bullish at this point, and at this area we had another shift right here. So you see price breaks structure to the downside, which high actually broke structure to the downside. This was actually the high that pushed price to the downside, and after that you see we had another shift in structure right here. So this is where we got the market structure shift. When we got the market structure shift, you see the order flow changes. So this is why I tell you that price doesn't move in a single direction. Price moves from a bullish market to a bearish market, and from a bearish market to a bullish market, just like we're seeing right here. You see price moved from a bullish to bearish, and you see after the bearish market, what we see, price was actually bullish. So when price turns bullish, what you're going to do is just to look for your buying opportunities, and at this point, this is where I want us to pay little interest in before I round off for this session. Then at this point, what can you actually see in the market? Price was actually bullish. You see this high was formed, we see a pullback, and you see a higher high was formed, which gave us this break of structure. Now when we got the break of structure to the high, what can we actually see? Price pushed to the downside, and this is a valid market structure shift, and you see we have another market structure shift right here. So I just want you to pay attention to the things I listed. Just firstly, order flow. You see now we have a shift of order flow right here after we had this bullish move, and at this point you see the order flow was shifting right here. And secondly, identify your POI. So where is your point of interest? You see this is a very nice point of interest right here. This is a very nice bearish order block right here. And where is your pricing efficiency? You see we have a very nice pricing efficiency right here. And where is your liquidity inducement areas? From what you can clearly see right here, this is your inducement area, because this serves more like equal highs at this particular point, which can also serve as your inducement area. And finally, you see price comes back, and just like I said, approach with any entry type of your choice. See we have a mitigation. See price returns back from this area, mitigates the level, and it pushes it downside, which breaks another structure to the downside. So this is a valid market structure break right here. So when you have a break of structure, what is your expectation? We're going to have a continuation of the order flow, because the order flow has shifted once more. Now from this area, what are you going to do? We have a break of structure to the downside. So when we have this break of structure, what are you going to do? You're going to identify your POI, identify your point of interest. So this is a valid point of interest right here. And secondly, try to look for your pricing efficiency, and if you look closely, you see we have a little fair value gap right here. You see this one is actually very little right here. We have a very little fair value gap if you try to zoom in, and you're going to see that. And thirdly, identify your liquidity inducement areas, right? So this is an inducement area. You see price swept it at first. When it came to this particular level, it couldn't get to our zone, and we have a push to the upside when price moves away. So this is going to serve as the new inducement area, and you see finally price comes back to this level after this liquidity inducement areas was built, comes back, mitigate our zone, and a push to the downside. So when you see this, what you're going to do is you should also mark out the most recent break of structure, because we're seeing this institutional candle right here. And when you're seeing this institutional candle that has inefficiencies, what you're going to do is you also have to mark your point of interest. See, you're going to mark maybe this other block as your point of interest. Where is your inefficiencies? See, we have inefficiencies right here. And where is your liquidity inducement area? You see in this case we have more like a trend line liquidity right here, and you can actually mark it this way if you want to mark it as your inducement area, right? You can actually mark this area as your inducement area. And from what you can see, price comes back for mitigation, and you see how price mitigated this particular level right here. Okay, you see that particular mitigation, price mitigates this level, and I hope this makes sense to you, just like what I explained. So what you're going to do is you're going to keep trading this in continuation, see where you see a shift in structure once more, and you're going to look for a bullish market, because what you're seeing is we're having a bearish market right here. Even though this bearish market is not as this, because trading this type is actually going to be very hard, because price is not actually retracing back to point of interest. But when you see this series of mitigation telling you, okay, this is a very strong order flow, bearish order flow, actually you're going to make money from this setup particularly. Okay, you're going to make a lot of money from this kind of setup. So I hope this makes sense to you, and I hope this actually helps you understand how to trade smart money concept on synthetic indices. And just remember, like the things I explained, where you have lot size, okay, just like I said, if you have less than $100, make sure you're using the lowest lot size, and make sure you always set your take profit and your profit target. Very necessary. So go back now and practice, just like I always say after each of my lessons. Go back and practice. The only way you can improve is when you practice. If you don't practice, you always make mistakes, and you might not actually succeed using this strategy on synthetic indices. So I hope this makes sense to you. So thanks very much for watching this one. This is still Mr. Solomon Wisdom, aka Born to Trade, and if you're new to the channel, consider subscribing to the channel. And we actually have a free Telegram community. You can look to join us today. So thanks very much, and see you in the next lesson.